The single biggest transaction in South African property history occurred yesterday. It came a little bit too late for this show, but let's give it some justice today by speaking to Angelique de Roville, Property Portfolio Manager at Investec Asset Management. Angelique, 9.717 billion was the transaction, as opposed to the previous transaction involving the same property, $1 billion US, 7 billion rand at the time. It's an amazing deal, isn't it?
It's an amazing deal, Lindsay. It does sound like it has exchanged hands at a premium. Certainly the premium that exchanged hands in 2006. But I think it needs to be taken into account the fact that rental from the investment portfolio has increased substantially in that 5-year period.
Yes, it has, and it is, of course, probably Africa's premier tourist attraction if you take it alongside Victoria Falls and the pyramids, both of which are sort of under a bit of pressure at the moment for various reasons. So let's say it's one of the top 3 anyway. I mean, it really is a unique property.
Well, I think we would class it as South Africa's crown jewel. I think it's a precious asset that's recognized as such, not only in a local context, but also in an international context.
Yes, indeed. I was looking at an interview with one of the people that were involved in the sale, the Growth Point CEO, and he said they're expecting yields of 7%. Have you done any analysis on the mechanics behind this deal?
We have, and of course Investec are substantial investors into Growth Point, and essentially we're very comfortable with the deal from the point of view that it is earnings neutral. So they've acquired it at an attractive yield that's not going to create any dilution for investors, and for us that's a very pleasing result, especially given the quality of the asset.
What was your sense about the nature of the sale? Were these people distressed sellers? And I'm talking about particularly the Dubai leg of the selling arm.
It's a good question, Lindsay, and certainly we haven't engaged with the vendors, so we don't have any clarity in that regard, and there has been some speculation and some rumor-mongering around the fact that some of the consortium has been distressed. But at the end of the day, we believe that they're exiting this asset as happy investors. A reminder, they acquired it at 6.2 billion and they're offloading it at 9.7 billion. So the currencies aside, in real terms, they've essentially done a good job of achieving a decent return on their investment in a 5-year period.
Yes, they did some initial capital investment. They expanded the property and they put in various new aspects to it, but that sort of ground to a halt over the last 2 years. Do you think the PIC and Growth Point will start to upgrade again and develop some of the spare area that is still available?
I think the PIC and Growth Point are very ambitious in terms of the plans that they have for the 1.4 billion in development bulk that they've acquired as part of this deal. I know that some planning approvals have been obtained for additional retail space as well as some hotels. And I believe they've got the enthusiasm and the energy and the kind of skill that's required in order to roll out that development bulk.
The reason I asked you about the reason for the sellers selling is because, there's 2 ways to look at it. You can say to yourself, well, isn't it fantastic that South African investors were there ready to mop up the sale and being very keen and very optimistic. On the other hand, you could say to yourself, well, maybe it's because the overseas investors, the holders of this particular property, are saying, well, after the World Cup, that's it. South Africa has peaked. Where do you stand?
Lindsay, I think that a different set of circumstances influenced the decision of Dubai World and the Livingston brothers to dispose of this asset. I think it's delightful that the asset now is back in the hands of South African investors, with specific reference to government employees, to their pension fund, and Growth Point. Growth Point essentially is a listed property stock that most people can access by buying shares through the stock exchange. The shares trading in the region of 17 Rand. You only need to buy 100 shares to essentially own a portion of the V&A waterfront. So we'd imagine that a few South African investors in a private capacity might be quite keen to own a small slice of the V&A by buying some Growth Point shares at current levels.
Is it a big boost for the commercial property sector in general? Obviously, this is the most unique property, as I keep saying. But on the other hand, it might say, well, goodness me, if they're confident enough to pay 9.717 billion for this, then why not a few other properties around the country?
We are very encouraged that there will be further substantial property transactions in the listed property space in the course of the next year. It's no secret that Old Mutual are considering, through their listing triangle, bringing some other crown jewels in South Africa to the listed property market. Some of those assets include Menlyn Shopping Centre, Gateway in Durban, KwaZulu-Natal, and I think that the V&A will probably set precedent for further substantial transactions to come.
Let's hope so. Angelique, thanks so much for your time this evening. That's Angelique de Roville, Portfolio Manager in the Property Division at Investec Asset Management in Cape Town.